What is going on, YouTube? This is Dan French. You guys know me from LV Crib Tours. You know me from the French Workbench podcast. This is the Sound Off. This is a separate channel we just launched not too long ago. So I just want to say thank you guys out there for showing the support. Today I'm going to talk about a very interesting article that came out, and I've been trying to put these out a little bit more. Had a lot of things going on, but I'm going to continue to try to put these out every week. So one of the things I want to discuss today is Wells Fargo, the forbearance that we had before, the forbearance, the CARES Act, and a lot of these borrowers that initially, these buyers that already had a mortgage with Wells Fargo, they were interested in possibly getting into the forbearance program. They filled out the application part, but never really wanted to get into the program itself. Well, Wells Fargo's in a lot of trouble right now. And so they're going through a process of a settlement of $94 million for over 200,000 homeowners or borrowers or mortgage owners, you want to say, that are suing Wells Fargo because what happened is Wells Fargo introduced this program through the CARES Act, the forbearance program, to stop making payments. And what it did is they said it affected their credit. Well, potentially it could affect your credit. I don't think it's necessarily just about the credit situation. They're also upset that they couldn't refinance out of a loan because they were in that forbearance program. And typically, like for other lenders, it's 3 months. Once you've been making on-time payments for 3 months after, that forbearance or your forbearance period ended, if you took yourself off, then you could refinance. Well, what they're complaining about is some of them are saying it affected their score. The big thing here is that Wells Fargo, this is not the first time that they've been in hot water. They put these people into forbearance erroneously, and that's what these people are saying is, these homeowners, these mortgage owners with Wells Fargo, is that not only did they get into the program that they didn't want to get into the program in the beginning, Wells Fargo pushed them or put them into the program. Secondly, it affected their credit. And then the last thing is they couldn't refinance when rates were low 2%, mid 2s, maybe the low 3s. And so they're going through this lawsuit. It looks like they're going to lose this lawsuit and pay out $94 million through a settlement. Now, I could see it both ways. I'm probably going to lean more towards the consumer or the mortgage holder. And, I'm also going to give you my pros and cons, but then tell you my opinion about what this is, what I see this happening and why it happened and some of the outcome of where we're at. Now, if you guys don't know, also, I'm a real estate agent out here in Las Vegas. If you guys are looking to buy or sell a home, please look at my website, lvhomeprofessionals.com. It's a great place to get started. And I'm also, all my information will be in the contact or comment section, all my contact information in the comment section below in this video. So let's go back to the interesting article I was reading about. So Wells Fargo was saying, well, you know what? They wanted to go into this program. This is something that they initiated the conversation. They filled out the application to do this. And now, they're looking at this saying, well, maybe, they're trying to say, we didn't want to get into this program and now it's affected us. We don't have an opportunity now to take advantage of those, or we didn't have an opportunity to take advantage of those low rates. And so when people were trying to refinance, it really, now it doesn't make any sense to refinance, right? So I think that's the big topic here is these consumers out there, these buyers that bought a home and had Wells Fargo, or maybe it was sold to Wells Fargo and Wells Fargo's the servicing holder. They have no shot now to refinance. And so now they're stating that over 200,000 mortgage owners through Wells Fargo were affected by this, and that's why this class action lawsuit was put against Wells Fargo. Wells Fargo is coming out and stating, they initiated this, and there shouldn't be any payout. Yet I feel like the judge is looking at this because of past history with Wells Fargo and some of the things they had to pay out. That's why they're paying this out. Now, as a consumer out there, I get it. You were looking for opportunity, the CARES Act. One thing I could say about it is it didn't affect your score because that was part of what the CARES Act program was about. I don't see how it would affect you unless you just didn't pay after the forbearance program was completed or you just didn't make a payment altogether. So the credit situation, I'm not sure how that would affect you because the CARES Act, that was the purpose of putting the CARES Act in place, is not to pay your mortgage so you can, eventually get back on track, and then everything was pretty much frozen, right? Now, There's other opportunities out there that's happened as well. There was loan modifications and reduced mortgage payments. So there was things that servicers were really trying to do. Now, to go back to where we're at, though, you look at it and you say, well, putting somebody in a program or putting people, mortgage holders in a program that they weren't fully committed, I don't know. I mean, that's definitely a he said, she said thing, because I'm not sure how Wells Fargo put them in this program if they didn't have a conversation or want to be put into the program. Just by filling out an application does not make it where you're now a part of that program or the CARES Act. So that's going to be interesting, right? That part of it's very interesting. I do know that there's been people out there that did have interest and then decided not to do it, and then eventually were in the program, and then they had to fight to get out of the program and say, I never wanted to get out. It was a mess, right? Everybody was trying to get out of these programs. They're either in or out. If you got into it erroneously, then you're trying to get out. There was issues. I've had family member that did the same thing, where they were trying to get out of a program and they were just, fighting tooth and nail to get out of that program. So that part I see. Now, Wells Fargo is used as an example, though. And you can't think that other lending institutions did the same thing, or servicers did the same thing. And the reason they're doing this to Wells Fargo is they're making an example. One is, when you're filing a lawsuit, it's always good publicity and headlines. But Wells Fargo and these bigger banks, just like big banks that are targeted because they want to make an example for smaller banks and smaller entities that say, hey, don't do this. Plus, Wells Fargo can pay this out, right? I mean, you got to think, if you go try to attack a company that doesn't have funds like this, or doesn't have the capital, the liquid, to pay off a $94 million lawsuit, probably not going to pursue that, right? So there is two sides to it. I do feel that Wells Fargo probably should have been more efficient on the situation of knowing who's in and who's not in this program. There should have been more of a definitive position on that. Also, you're a mortgage owner, and you knew what kind of, if you're going into something for 3 months, sometimes it was 12 months for some people, but a minimum of 3, and you don't know what you're in, and all of a sudden this process, you have to come back. Somewhere down the line, somebody knew something, that they were in this program, or were making payments, or were not making payments through this program, and what the consequences were. Now, I think the big thing is that it's the restrictions of getting the lower rate to refinance out of that rate, and I think that's where the big thing is at. But then they put and added other layers to this, saying, hey, we didn't want to get into the program, and that might be true, but I do think that there's a gray area there. And then also affecting the credit. I don't see how that's going to affect your credit unless you did not know what was going on, meaning you got into the CARES Act, and then you get out of the CARES Act maybe for the 3 months or 6 months or whatever the servicer allowed you to freeze your mortgage payment under forbearance. And then once you get out of it, then you have a situation where you don't know where you need to go or what needs to take place, and then you're not making your mortgage payment. That's the only way I could see it affecting your credit. So if you guys have any questions, please reach out to me directly. I am a real estate agent out here with Key Realty. LV Home Professionals, check us out. Subscribe, like the channel. I will see you guys at the next stream. I'm out of here.